All right, let's dive into one of the most powerful and honestly one of the most misunderstood principles in all of investing. And here's a hint. It's not about being a genius stock picker. It's not about trying to time things perfectly. It's about the simple but profound act of just staying put.
You know, this quote from Morgan Housel just nails it, doesn't it? The market doesn't reward you for frantically checking your portfolio every 5 minutes. It doesn't care about your agitation. What it rewards is your endurance, your patience. And that really is the million-dollar question. When the headlines are screaming crash and your portfolio is just a sea of red, every single instinct in your body is telling you to do something. Sell, get out. But what if the most powerful move you can make is to do absolutely nothing at all? Let's dig into that.
Okay, so to get a handle on our own reactions, we first have to really understand the market itself. And the thing is, it's kind of got this split personality. It has two very different faces, and knowing which one to focus on, well, that changes everything. Think of it like this. On a daily, weekly, or even monthly basis, the market can feel like a total storm. It's just chaotic, right? A mess of ups, downs, and a lot of fear. But if you zoom out, a completely different picture comes into focus. You see this clear, powerful upward trend driven by real things like innovation and economic growth. The whole trick is training your brain to focus on that long-term journey, not the daily turbulence. So what's the single biggest obstacle to your long-term success as an investor? Is it a market crash? A bad recession? Nope. It's the person staring back at you in the mirror. It's our own reaction to the chaos. And this is why time is so critical. Just by staying invested, you naturally start to adopt a longer perspective. Time acts like this incredible buffer, you know? It smooths out those terrifying peaks and valleys. It helps you resist those gut reactions, calming the volatility not just on the charts, but inside your own head. And this right here, this is the classic trap we all fall into: emotional investing. When prices are soaring, greed kicks in and whispers, "Buy more, you're gonna miss out." And when they're plummeting, fear just screams, "Sell everything, get to safety." This cycle, it's the exact opposite of a winning strategy. And patience is your shield against it. So what's the real cost of giving in to that fear? What's the price you pay for being out of the market, even for just a little while? Well, as it turns out, it's way, way bigger than you might think. It's such a tempting thought, isn't it? I'll just sell now, dodge the losses, and then I'll jump back in when things look better. It feels so smart, so clever. But this strategy has a massive hidden risk that most people just don't see. And here it is. This is the core problem with trying to time the market. The rebounds, the recoveries, they are often sudden, they're explosive, and they are completely unpredictable. A huge chunk of the market's total gains for an entire year can happen in just a handful of days. If you're sitting on the sidelines, waiting for safety, you completely miss that rocket ship, and that can devastate your long-term returns.
Okay, so we've seen the very real dangers of getting out. So now, let's flip the script. Let's look at the incredible rewards you get for just staying put. This is where your patience truly pays off.
This is where the real magic happens. By staying invested, you're always in a position to catch those powerful rebound days we just talked about. But you also unleash the unbelievable force of compounding. That's when your returns start earning their own returns, creating this financial snowball that just gets bigger and bigger and bigger over the decades. It's incredible. So, the crucial takeaway here is all about a mindset shift. You have to stop seeing time as this thing you have to beat or outsmart. Instead, you need to start seeing it for what it is: your most patient and your most powerful ally on the journey to building real wealth. So, how do we actually do this? How do we put all this into practice and keep these ideas front and center when the markets get choppy? Well, let's break it all down into a simple, memorable framework. All right, these are the key takeaways. First, always remember the market's two faces. It's chaotic day to day, but it's reliably upward over the long haul. Second, know that staying invested is how you grab both those rebounds and the awesome power of compounding. Third, use time as your anchor. It'll stabilize your emotions. Fourth, and this is huge, never forget that the real risk is being on the sidelines and missing the best days. And finally, you have to internalize this. Patience isn't just sitting around. It is your most powerful, active strategy. And I want to leave you with this final thought from the legendary Charlie Munger. Look, understanding all these concepts, that's the first step. and it's a great one. But the real value comes from taking these ideas and assembling them into a strategy that you can actually stick with through thick and thin. The knowledge is right here. The power is in how you apply it.